This video will demonstrate how to prepare a partial IFRS statement of comprehensive income, including discontinued operations, other comprehensive income, and earnings per share disclosures. So in this question, the company had income from continuing operations of 12.6 million. And during 2020, it disposed of a restaurant division at a loss of 89,000 net of tax of 38. But before that disposal, it continued to operate that also at a loss, net of tax of 135. And then the company had an unrealized gain in OCI of 43,000, also net of tax, related to what's called FV-OCI investments. So an FV-OCI investment is a type of investment where unrealized gains and losses are included in OCI, other comprehensive income. Does anybody remember what an unrealized gain or loss is?
Like an increase in the share price?
Yeah, so you can have an increase or decrease in the share price. So that's a gain or losses. But what does the term unrealized mean?
Hasn't been sold.
That's right. It hasn't been sold. So really, it's a paper gain or loss. You actually don't have a true gain or loss until you sell something. The rest is all on paper. So that's what this is. Part of the requirements for financial reporting is to measure our assets at their fair value in this case. So we have these investments and they either went up in value or down in value. And what we have to do is make sure that we reflect that. And when you see this OCI, does this mean that the company is reporting under ASPE or IFRS?
IFRS.
IFRS, you see OCI, which is other comprehensive income, only in IFRS. So the problem, doesn't have to tell you. That reference alone is enough for you to determine what you're reporting under. So under IFRS, we would take those paper gains and park them somewhere. And OCI actually is in equity on the balance sheet. So right underneath retained earnings is this special place, and it's a parking spot. Realized gains or losses, so the real ones, when you actually sell it, end up in net income. And that's regardless if it's ASPE or IFRS. Now, if that said FVNI, that means fair value through net income. So if this was an ASPE problem, that paper gain or loss actually flows through the income statement as an unrealized gain or loss. This would be an other income or losses, but not discontinued operations gain or losses, right? So you have operating income, that's, the income from doing what you do. And then you have like an other revenues and expenses section. That's where unrealized gains or losses would be. And also where realized gains and losses would be too under ASPE and also under IFRS. All I'm doing is saying, if you see somewhere in an exam, that's what it's referring to where those end up. And where they end up tells us where in the income statement we need to present it. Some other information here. It says, Blue Collar had 10 million common shares outstanding during the year. Now, why did they throw this little piece of information at you when all of this other stuff is about income and discontinued operations and OCI? What's that all about?
To determine your earnings per share.
That's right. That's the hint that you're going to have to determine earnings per share, EPS. It is a required disclosure under IFRS, and it's optional under ASPE. So that's something to remember as well. In fact, all I need to say is this: prepare a properly formatted income statement with all necessary disclosures. That's all I have to say. And so by understanding this very brief problem, you should then know that, okay, OCI means IFRS. IFRS means I also need to include EPS in the disclosures. So you have to do all of that. If it doesn't say OCI, then I have to tell you if it's IFRS or ASPE, if there's no indication. If it's an ASPE problem and I say prepare the required financial statements, you don't have to include it. So you see how in the types of questions, I also gauge your understanding of the concepts, which means there's some critical thinking that's required instead of just copying something you've already seen. So when we prepare a statement in good form, of course, we will start with the title, income. You can call it statement of income, income statement. That part doesn't matter for the year end, December 31st, 2020. Remember that for an income statement, and what you'll see later for a statement of changes in equity, it's for the year ended, not at. With this question, by it telling us it had income from operations, that means that we don't need to calculate. We don't have to do the whole income statement from sales through, right? It's basically come to that point, and this is our starting point for this question. So we're going to start with income from continuing operations. So that is already after tax on the continuing operations. So what do we have? What section would you see next in the statement?
Is it discontinued operations?
It is discontinued operations. what will we have in this discontinued operations section? That's right, Drew. Yeah, the operating loss. We had the restaurant division, the company sold it, then it incurred an operating loss prior to selling it. So we can call that loss from operation of discontinued restaurant division. So what's the correct way to present that? It says operated a loss of $315,000, and that's already net of tax. Okay, so that means that the reported number is 315,000, but we need to disclose, we say net of tax, 135,000. This could also have said that there was an operating loss on the DO of $450,000. And somewhere else in the question, it might say tax rate equals 30%. So what would you have to do if you saw it presented like that? By giving you this and saying that that's the operating loss in the DO, to make it even clear, I would say 450,000 before tax. Okay. And I think that would be the fairest way to present it. So if you're paying attention, you go, oh, this is 450 before tax. And somewhere like the last thing I might say in that problem is the company's tax rate is 30%. So this tells you now that if you multiply that by 30%, you get taxes of 135,000, right? That is how this presentation would arise. 450 minus the 135 in tax is 315,000. So you can see how I can present that in a slightly different way and have you make one little more calculation. You need to separate the tax and report on an after-tax basis or net of tax. That's what net of tax. What else would you see in the DO section?
The loss from disposal.
Yeah, loss on disposal of the DO. But then what else do I need to show?
Net of tax.
Yeah, net of tax. And the tax is, you're told what the tax is here, right? Tax on that is 38,000. Same thing then with the previous line. I could have given that to you as 127,000. The loss on disposal is 127,000 before tax, in which case you have to carve that out. 127 times 0.3 is 38,000 and put the net right next to it. So 404,000. And then that will provide us with what?
The net income.
That would be your net income. Income minus losses, 12,196. Okay, so are we done? We got our net income. We're good to go?
The unrealized capital gain.
Which belongs in what type of section, my friend? OCI, other comprehensive. And here's where we will have the unrealized holding gain on FV-OCI investments. And you also need net of tax, and that's 18,000. Again, could have provided you just the before tax number and the tax rate, and then you would have to carve those out. That's $43,000. Now, my income from operations plus or minus my DO gives you net income. Now, plus or minus anything that's in other comprehensive income. Now we call this comprehensive income. And that is our very last line of income, 12,239,000. So now are we done our statement? We can move on to the next question in our exam.
EPS.
You need the EPS. So earnings per share. So how do we report EPS? We actually have to report the EPS on the continuing operations and the DO, and then on net income. We do not report earnings per share on the OCI section. Okay, so here's what it's going to look like. You're going to have income from continuing operations, and then discontinued operations and net income. So how would we calculate the earnings per share on income from the DO? The hint is find in your income statement this line. Your income from continuing operations is how much? 12,600,000. And you need to divide that by what? By the number of shares. And how many shares are there?
10 million.
Common shares. So that makes this 1.26, right? Then you do the same thing for the discontinued operation. What number do we have in the discontinued operation?
404,000
404,000
divided by
10 million common shares, and that is 0.04. But don't forget that this is a loss. So you need to report that as a negative number. And then your net income is just that, the net income, 12,196. And that works out to what, $1.22, which is the same as $1.26 minus 4 cents. So that is the full and complete EPS disclosure when you have a discontinued operations section.